Good morning, everyone, and welcome to my gold and silver update. I'm JR. Thank you for joining me. We're going to look at the gold and silver market. We're going to do turbo analysis, try to get them knocked out in less than 3 minutes or less. This is the weekly chart here for gold. And, I don't have to say this anymore here. We have a huge, or what seems to be a pretty big cup and shoulder formation. There's your cup. There's your handle, right? So really nice formation, and it does suggest that gold is going to make its leg higher at least to the $3,000 range. I think it's going to continue to go much higher than that, but for the short term, we're going to give it a target. This is how we're going to draw the target. We're going to do this. And we're going to say that gold is looking to go, at least the next level is going to be around 2,800 when we surpass this this high. I think there's evidence to suggest that we're going to continue to go much higher. But I think overall, there's your cup and handle. Now let's study the immediate time frames here. This is the weekly time frame. Okay, so still respecting this trend line here. Let's look at the daily time frame, and I think we can see that this is where the buyers are really coming in here. So every time we come in here, we do see a little bit of a bounce. If we look a little bit closer, we see big engulfing candles within this trend line here. So I think gold might continue to go down a little bit further now, but I think overall, I've been getting a lot of questions. Why isn't gold moving? Why isn't gold moving? I don't think people are looking at the charts when they say, why isn't gold? We're seeing inflation all around, but we're not seeing gold move. I think everyone is wrong for saying that. I don't think they're looking at the charts. I think anyone that's saying that gold is not moving, I don't think they're looking at the charts. You've seen gold go from 1164 back in August of 2018, and the high is 2076. So again, you have almost a move that doubled within a 2-year span, actually less than 2 years, right? In August of 2018 and in August of 2020, right? So just exactly 2 years, and the prices of gold have doubled, and I think it's going to happen again. I think this is what's going to happen. I think you're going to see the move up. I think you're going to see some consolidation, and I think you're going to see another double. I think gold is probably going to go from 1,700. Of course, we have that cup and handle formation that's targeting 27, 28, but I think more than likely this thing is going to go to $35,000 to $4,000 very, very, very soon, probably again within the next year and a half. Another thing that I want to point out too is that another thing that I'd like to point out is that these consolidation periods are very, very healthy for any given market. When we look at charts like, let's say, Amazon, right, that for the most part you just have a giant move to the upside. I think there's been some consolidation recently, and I think it looks like there's a double top, but anyway, we're not analyzing Amazon. But my point is that these moves here, right, these big moves to the upside are not necessarily all that healthy in the terms that we want to see some more buyers. See, when the market moves, when the market does something like this, and it moves from 1,700 to 2,000, right? And the market keeps going up. What happens is the buyers are not, the new buyers don't come in, right? You might have some guys that don't really understand the way the market works, and they're coming in as the market rallies. And again, the problem with that is that there's no levels of buying. You have to have levels of buying, meaning that when the market does something like this, you can buy when the market goes out of this zone and come back in the zone, and then we go higher, right? And then we have the next buying level, right? Which again, when the market comes back into that level, you can buy into that level, and again, you have the new rally, right? So I can continue to do this, right? Every time we get out, we come back in, we have a rally. So the problem with that is, the problem with moves like this, right? With moves like this is that there's no entry point, right? Yes, if you're a trader, you'll probably come back in, but again, that's the problem, that the higher the market goes and the faster it goes, the more difficult it becomes for buyers to come in and maintain that rally, right? Although the rally sometimes continues, right? My point is that consolidation periods are very, very, very healthy. So when you have a big move like this, then you're left with levels of support like this. And that's what's happening here, right? We had a big move to the upside, and now it looks like this is the zone where the buyers are coming in. We can see a little bit more buyers coming in this trend line. But again, with that said, these consolidation periods are very, very, very healthy, and they attract a lot more buyers because as the prices of gas, as the prices of everything, commodities in general, all commodities, wheat, corn, soy, it does not matter. They're all sky high right now, right? So again, gold is just gaining more buyers, and I think right now is the time to add to your position here between the 1600 and the 1750 level. If we do see these levels, I think it's time to buy because the trend, the downtrend, right? This short-term downtrend has already been broken, right? So again, you had the move up, you had that downtrend, and again, a fake out, right? You saw a move above that trend line, and now after gaining more buyers, now we're seeing gold again break out of that trend line. We don't necessarily want to see gold fall below 1675, maybe 16 and a half. But it can happen. If it does, this is your time to buy. Inflation is here, and gold is a great measure of inflation. We can clearly see that gold has more than doubled within this time frame, right? Well, not doubled, but it's gone almost double from 1160 all the way to 2060. Now we allow gold to consolidate, and we look for the moves higher. So again, nothing to worry about, nothing to fear. If anything, you want to be adding to your position. Let's look at silver. And again, we can see that silver just had again, where is silver? Silver has gone from $11 in March of 2020 to $30 within a matter of, and this is what I love about silver, although it's extremely volatile. A lot of people lose their behinds on silver. If you just buy and hold, you'll be okay, because this is the nature of silver. Silver will go from $11.20 to $29 within a matter of from March of 2020 to August. So in less than 7 months, right? Silver almost it basically went up 3 times fold. Right? So there's nothing wrong with some consolidation, and at this point, anyone who's not looking to pick up more silver at these levels is not really paying attention to the market. Can the market go down a little bit further? Absolutely, but we can see that when the market, and this is what silver does, silver scares the crap out of everyone, right? You had support for about 7 years from $13 all the way to $19, right? Actually, from 2014 or 13, I should say, silver just traded sideways. So the sideways trade is gone. We've now broken above this level. We all talked about how important this level was, and now that we've broken above that level, it's very, very unlikely that silver is going to create another low below $11, right? So what you want to do is you want to look for that. You want to look for those buying opportunities, and right now these are your buying opportunities. Remember, we look at highs and we look at established lows. As of now, this is your low and this is your high, right? So 1160 is your low, 1124 is your low, and 2984 is your high. We would hope that this is going to be the new low before the new high, right? Before the $30 is taken out. But this could happen here at the $21 level. It could also happen here at the 19.5 level. Heck, it could even happen at the $17 level. But my point is that the bull market has already begun, and whoever is not involved is going to miss out on an opportunity of a lifetime, because there's not many assets out there that will quadruple, that will multiply by 7 or 8 times. And that's what I believe is going to happen. I believe that silver is going to go from 21 or from, let's say, 19 or from $18, right? We're going to probably have something short term. If we do break support, we'll have something short term. Again, very short term like this. Takes out all your stop losses, and that's why we don't trade with leverage. That's why we buy and hold silver, right? You're trading in those worthless dollars that are just getting depreciated every month. Why? Because the federal government continues, or the Federal Reserve, I should say, continues to print. There's no end in sight. Inflation is higher than they're saying that it is. And again, silver's looking for those buyers to come in to take it to the next level. My prediction is that silver is going to go from $20 to roughly about $120 to $150, right? Which means that if you buy $100,000 worth of silver, right? You buy $100,000 worth of silver right now, divided by 21, or let's say 22, right? You're buying yourself 4,500 ounces of silver, right? So with 4,500 ounces of silver, what's your risk, right? You're going to put $100,000 and you're buying right now at $21, and your risk is that this is going to go down, let's say at worst case scenario, let's call it an $8 move to the downside. So 4,500 ounces times $8, you're looking to lose $36,000. So your risk is $36,000. Now that risk becomes lower and lower as the prices go lower and lower, right? I'm not saying that it's going to break this level here, but again, let's say that they are. If I'm right, if I'm wrong, you lose $35,000. If I'm right, and again, all signals are pointing in that direction, that I am going to be right, right? So again, if I'm right, silver is going to go from $20 all the way up to $100 minimum is the minimum calculation that I've done. Actually, is $90 the minimum calculation that I've done. And if that's the case, then what we're going to do is we're going to do 90 minus 20, and you're going to have 70. So you're going to have 4,500 ounces times $70. You're looking to make $315,000. Let me do the math on that again. 4,500 times $70. You're looking for a profit of $315,000. My question to you is, are you willing to bet? Okay, and let's just say this: 315 divided by $36,000 is 8. Are you willing to make a bet that the risk reward is 8 to 1? So for every dollar that you bet, you're looking to make $8, and that's minimum, guys. That's minimum. My prediction is 120 to 140. I mean, all the signals are there, all the signs are there. So again, really pay attention to that portfolio of yours and really look at risk to reward, because this is the risk. The risk is $8 move to the downside. The reward is $70 move to the upside. $70. That's minimum. So again, guys, I hope you guys enjoyed the video. We'll see you guys next time.